Negotiable debt instruments, the basics. Negotiable debt instruments, such as promissory notes or judgments, hold a unique place in the financial system. According to Title 12, United States Code, Section 411, these instruments must meet specific criteria to be valid. For example, you cannot use one debt to pay off another debt. This principle is critical because Federal Reserve notes, the money we use every day, have no intrinsic value. Before 1933, money was backed by gold or silver, ensuring its value. However, after House Joint Resolution 192, the government removed gold backing, leaving money as a promise to pay. This means modern currency operates like an IOU or a gamble based on future value, which creates a continuous cycle of debt. To break this cycle, we look at methods such as set-off or discharge. These processes allow us to reconcile debts rather than perpetuate them. Public versus private systems of credit. The currency tied to negotiable debt instruments serves a broader purpose in reconnecting the insolvent public side of the economy with its private counterpart. The public side refers to entities like U.S. citizens and corporations, while the private side encompasses creditors and natural persons. When commercial offers are made between public entities and held as collateral by a private creditor, this creates opportunities for bank asset enhancement. For example, a secured creditor may use debt instruments to increase a bank's portfolio, leverage funds, or issue discounts under Title 12, Section 411. To activate these rights, individuals must understand how to manage their financial instruments. By properly endorsing checks, promissory notes, and statements with references to Title 12, Section 411, you establish that the funds are redeemable in gold, reconnecting to the original intent of value-backed currency. Filing a UCC-1 financing statement. A UCC-1 financing statement is critical for securing your interest in any property or financial instruments. This document distinguishes who is the creditor and who is the debtor, ensuring your claims are legally recognized. To become a secured party, you must first draft a security agreement that lists all relevant assets and claims. Next, register this agreement with your local county and file a UCC-1 financing statement. By doing so, you gain the highest claim over the property in question, securing your rights against other parties. Without these filings, courts and banks may not recognize your claims. However, with a perfected security interest, you gain first in line, first in time priority, meaning no other claims can override yours unless previously registered. Federal Reserve notes and the legal definition of money. Federal Reserve notes, the paper money we use daily, are not actual payment instruments but representations of debt. According to Title 31, Section 5118, legal tender is no longer redeemable in gold or silver, making our current currency system based on trust rather than tangible value. This shift began with House Joint Resolution 192 in 1933, which replaced gold-backed currency with Federal Reserve notes. While these notes are recognized as legal tender for public and private debts, they can only discharge debt rather than extinguish it. Extinguishing debt requires an asset with real value, such as gold, silver, or labor. This legal framework is why understanding and utilizing negotiable instruments, such as promissory notes or special deposits, is crucial. These tools allow you to manage financial obligations effectively within the existing system. The role of the U.S. citizen in commerce. A U.S. citizen, often identified by the all-capital letter name seen on driver's licenses, credit cards, and social security cards, is a public entity. This public entity operates as a trust or estate, serving as collateral within the economic system. The private side of this arrangement is the natural person, the living, breathing human being. As a natural person, you hold the authority to claim your estate and manage it responsibly. By filing a security agreement and UCC-1 financing statement, you formally assert your standing as the secured party over your public persona. This distinction allows you to protect your interests and prevent unauthorized claims against your estate. Without these filings, others may act as fiduciaries over your assets, often to your detriment. Perfecting a security interest. Perfecting a security interest means legally securing your claim over property, accounts, or other assets. This process ensures that no third party can make a superior claim without addressing your lien first. To perfect your security interest, you must register your security agreement with the appropriate county office and file a UCC financing statement at the state level. This step notifies public entities of your claim, establishing your priority over the asset. For example, if someone tries to file a lien against your property, they must first pay off your secured claim. This system ensures that your interests are protected and legally enforceable. The importance of proper endorsements. Every financial instrument you handle, whether it's a check, a promissory note, or a statement, must be properly endorsed to assert your rights as the holder. This includes adding specific references to legal codes, such as Title 12, Section 411, which ties the instrument to gold-backed currency. For example, when depositing a check, you can endorse it with "for deposit only," Title 12, Section 411. This step ensures the funds are treated as redeemable in lawful money, protecting your financial interests. Similarly, promissory notes can be assigned or registered under UCC Article 9, transforming them into negotiable securities. These securities can then be used to set off debts or create new credit opportunities. Navigating court proceedings. When dealing with legal disputes, understanding your role as either creditor or debtor is critical. Judges and administrators will look for evidence of your security interest and claims. If you filed a UCC financing statement and perfected your security interest, you stand as the secured party. This means you can assert your claim over assets and challenge unauthorized actions against your estate. Additionally, using tools like Counterclaims and Federal Rules of Civil Procedure, Rule 13, allows you to protect your interests effectively. Always ensure your filings and documentation are complete and properly formatted to avoid unnecessary challenges. Utilizing the IRS for set-offs and discharges. The Internal Revenue Service, IRS, plays a vital role in the process of discharging debts. By understanding their procedures, such as those outlined in the Internal Revenue Manual March 8, 1945, you can process negotiable debt instruments effectively. For instance, registered mail numbers can serve as bond numbers for transactions, ensuring that your documents are tracked and acknowledged. When submitting forms like IRS Form 56 to appoint fiduciaries, use precise language and follow the appropriate guidelines. Proper communication with the IRS can facilitate the discharge of public debts and ensure compliance with tax laws. This step is essential for anyone managing large estates or significant financial obligations. The role of negotiable instruments. Negotiable instruments, such as promissory notes, checks, and money orders, serve as essential tools within the commercial and financial systems. Under UCC Article 3, these instruments are governed by strict legal requirements that define their use and enforceability. A promissory note, for example, becomes a security when properly registered under UCC Article 9. Once registered, it transitions from being a simple debt acknowledgement to a negotiable security that can be traded, used as collateral, or employed to offset debts. Understanding these instruments and their proper use is critical. For instance, by endorsing a payment coupon or statement with specific language, such as accepted for value or payable to the U.S. Treasury, you can assert your claim to offset or discharge debts within the existing legal framework. The power of a UCC filing. A UCC financing statement is a powerful tool for establishing your claim as a secured party. Filing this document places a public notice of your interest in specific property, accounts, or other assets, ensuring your priority over competing claims. The process begins with drafting a security agreement that outlines your claim and the terms of your lien. Once this agreement is signed and notarized, it must be filed with the appropriate state office, often through an online UCC system. The UCC-1 filing identifies the debtor, typically your public persona, and the secured party, you, the natural person. It also lists the collateral covered by the agreement, which can include real property, bank accounts, or even intellectual property. By completing this process, you legally assert your priority interest, ensuring protection in court or other disputes. Understanding the role of the strawman. The strawman refers to the all-capital letter legal name associated with your public persona. This name, appearing on government-issued documents like Social Security cards or driver's licenses, represents your corporate or trust entity in commerce. Understanding the distinction between the strawman and the natural person is vital. The natural person, as the living, breathing individual, holds the ultimate authority over the strawman and its associated accounts or obligations. By asserting your status as the secured party through a security agreement and UCC-1 filing, you effectively take control of the strawman and its liabilities. This step allows you to manage debts, claims, and obligations more effectively, ensuring they align with your interests. Filing a security agreement. The security agreement is the foundation of your claim as a secured party. This document outlines the terms of your lien, the assets covered, and the rights of all parties involved. When drafting a security agreement, include 1. Identification of parties, clearly state the debtor, your strawman, and the secured party, you, the natural person. 2. Collateral description, list all assets included in the agreement, such as real property, accounts, or intellectual property. 3. Terms and conditions, specify how the agreement will be enforced and any obligations or responsibilities of the parties. 4. Signature and notarization, ensure the document is signed and notarized to give it legal standing. Once completed, file the security agreement with the local county office and include it in your UCC-1 financing statement filing. These steps ensure your claim is properly documented and enforceable. Using the IRS Form 56. IRS Form 56, Notice Concerning Fiduciary Relationship, is a key document for asserting your authority over your estate or accounts. By filing this form, you officially appoint yourself as the fiduciary, granting you control over the administration of your public persona's obligations. When completing Form 56. 1. Fiduciary title, identify yourself as the executor or trustee of your estate. 2. Social Security number, use the number associated with your strawman but without dashes, to signify its status as a trust. 3. Registered mail, submit the form via registered mail to ensure it is properly tracked and acknowledged. This filing not only secures your fiduciary role but also helps establish your authority in dealings with the IRS and other agencies. The role of registered mail. Registered mail serves as a critical tool for securing your filings and documents. Each registered mail number acts as a unique identifier, often functioning as a bond number when used in commercial transactions. When sending documents like UCC-1 filings, IRS Form 56, or affidavits, always use registered mail. This ensures 1. Tracking, you can confirm receipt by the recipient. 2. Legal standing, the registered mail number becomes part of the official record, strengthening your claims. 3. Proof of service, if disputes arise, the registered mail receipt serves as evidence of delivery. Keep a detailed record of all registered mail numbers and corresponding documents to maintain an organized and enforceable paper trail. Understanding your role as the fiduciary or executor of your estate is key to managing public and private obligations. By appointing yourself as the fiduciary using documents such as IRS Form 56 and a security agreement, you take control over the administration of your estate. Steps to manage your estate include: 1. File a security agreement, assert your claim over the assets and obligations of your estate. 2. UCC filing, publicly record your lien on all relevant assets. 3. IRS filings, use IRS Form 56 to establish your fiduciary relationship and file appropriate tax forms for recoupment and discharge of debts. These actions ensure that you maintain legal control over your estate and protect it from unauthorized claims or actions. Understanding the strawman and legal fiction. The concept of the strawman is central to understanding your role in commerce and law. The strawman is the legal fiction, your all-capital letter name, created by the government to engage in commerce. This distinction between the natural person, you, and the strawman, your legal entity, is essential in asserting your rights and obligations. By recognizing this separation, you can act as the principal and secured party over the strawman. Taking control of your strawman through a UCC filing and security agreement allows you to manage its obligations, such as debts, taxes, and contracts, on your terms. The role of accepting for value. Accepted for value, A4V, is a key concept in discharging debts and obligations. By endorsing a bill, statement, or other financial document with accepted for value, you acknowledge the debt and assert your right to discharge it using the public credit system. To properly execute A4V: 1. Write accepted for value on the front of the document. 2. Include your name and title, e.g., authorized representative. 3. Provide your exemption identification number, often your social security number without dashes. 4. Submit the document via registered mail. This process directs the debt to be offset against your account, effectively zeroing out the obligation while keeping the transaction within the legal framework. Using registered mail numbers as bonds. Registered mail numbers can serve as bond numbers in the financial and legal processes. These numbers are tied to the gold-backed system and provide a unique identifier for your documents. When using registered mail numbers: 1. Affix the number to your negotiable instruments or documents. 2. Use it to establish a trust or bond tied to your submissions. 3. Keep detailed records of the numbers and associated transactions for future reference. This practice ensures traceability and compliance while enhancing the legitimacy of your claims or filings. Navigating banking and foreclosure situations. In cases involving banking, foreclosures, or similar disputes, asserting your secured party status is critical. Start by filing your UCC financing statement and security agreement to establish your claim. Next, request specific accounting documents from the bank to support your position, such as balance sheets, cash flow statements, securitization reports. These documents help you identify discrepancies or unlawful actions taken by the bank, giving you leverage to challenge claims or negotiate settlements. Filing a counterclaim in court. If you are involved in legal proceedings, filing a counterclaim can be a powerful tool to assert your position. Under Federal Rules of Civil Procedure Rule 13, a counterclaim is either mandatory or permissive, depending on the nature of the case. To file a counterclaim: 1. Identify the basis for your claim. Use UCC Article 3 defenses, such as fraud, lack of standing, or failure to provide proof of claim. 2. Submit your counterclaim, include your evidence, affidavits, and legal arguments. 3. Ensure proper filing, use registered mail to send your documents and maintain proof of service. This action shifts the burden of proof and strengthens your position in court. The public and private side of financial systems. The financial system is divided into two sides, the public side and the private side. Understanding this distinction is essential for navigating commerce, debt, and obligations effectively. Public side. The public side represents the governmental, corporate, and financial institutions that operate within statutory and regulatory frameworks. It includes banks and financial institutions, the IRS and tax systems, public debt and currency systems. On the public side, Federal Reserve notes, FRNs, are used as currency, but they only function as debt instruments, with no intrinsic value. Private side. The private side represents you as a natural person, separate from your legal fiction, Strawman. On this side, you can exercise rights such as discharging debts, asserting claims through private contracts and negotiable instruments, establishing trusts and securing assets. Understanding this duality empowers you to operate effectively in both realms. Key role of the UCC, Uniform Commercial Code. The Uniform Commercial Code, UCC, is the legal framework governing commercial transactions in the United States. Mastery of the UCC is critical for asserting your rights and navigating financial systems. Key articles of the UCC 1. Article 3, Negotiable Instruments. Governs promissory notes, checks, and other financial instruments. Ensures that these instruments meet the standards for negotiability. 2. Article 9, Secured Transactions. Focuses on creating and perfecting security interests in assets. Establishes priority claims in the event of disputes. 3. Article 8, Investment Securities. Governs securities, including registered promissory notes. By understanding these articles, you can secure your interests, file proper claims, and protect your assets. Historical context of monetary policy changes. In 1933, the United States underwent a fundamental shift in its monetary system, marked by the implementation of House Joint Resolution 192. This resolution effectively removed gold and silver as the backing for U.S. currency, transitioning the nation to a fiat system. Prior to 1933, Federal Reserve notes could be redeemed for gold or silver. However, with the passage of H.J.R. 192, individuals and businesses could no longer demand repayment of debts in these precious metals. Instead, all debts were to be discharged using fiat currency, essentially a promise to pay back solely by the government's authority. This fundamentally altered how value and commerce were perceived. Key legal precedents in banking. Numerous legal precedents support the assertion that banks cannot lend credit or act as guarantors. One key case, First National Bank of Tallapoosa v. Monroe, established that national banks do not have the authority to guarantee the obligations of others or lend their credit. Similarly, in Federal Intermediate Credit Bank v. Larison, it was ruled that banks cannot create value or issue loans based on their credit. These cases emphasize the legal restrictions on banking operations and reinforce that your promissory note holds the true value in any transaction. Practical guidance for bank interactions. When interacting with bank staff, it is crucial to understand the hierarchy within financial institutions. Bank tellers and frontline staff are typically unaware of complex banking laws and the nuances of UCC, Uniform Commercial Code. Focus on engaging with legal departments or chief financial officers, CFOs, who are better equipped to address legal and procedural queries. Always remain polite and professional, but be prepared to provide documentation, including relevant laws and case law citations, to support your position. Pro tips for bank interactions. 1. Prepare thoroughly, have all documentation, such as your UCC-1 filings and security agreements, ready to present. 2. Use registered mail, all communications should be sent via registered mail to create a verifiable record. 3. Invoke specific laws, reference Title 12, Section 411 of the U.S. Code and UCC Articles 3 and 9 to substantiate your claims. In-depth examples of forms and filing. The following IRS forms and their applications are critical for managing your financial and legal standing. IRS Form 1041, Estate Tax Return. Use this to claim recoupment for your estate. It allows you to manage trust-related income and expenditures. IRS Form 56, Notice Concerning Fiduciary Relationship. File this form to appoint a fiduciary, such as the CFO of a bank, to manage your estate or account. IRS Form 1099-A, Acquisition or Abandonment of Secured Property. Use this to document the acquisition of your property by the bank or other financial institutions. IRS Form 1099-C, Cancellation of Debt. This is used to discharge obligations, ensuring debts are reported as canceled. Form 39.49-A, Suspicious Activity Report. If you suspect fraudulent activity, such as unauthorized use of your estate, this form should be filed. Filing Best Practices. 1. Ensure all forms are properly signed and notarized. 2. Use red ink for affidavits and blue ink for signatures, as these practices distinguish living persons from corporate entities. 3. Include the bond number or registered mail number on key filings for added security. Special deposits and trust management. A special deposit is a critical financial mechanism used to protect your trust assets. By establishing a special deposit, you place funds in a fiduciary capacity, ensuring they are used solely for the designated purpose. This aligns with the principles of a cestui trust, which is intended for the benefit of the beneficiary, you. Steps to create a special deposit. 1. Mark all payment vouchers with for special deposit only under Title 12, Section 411. 2. Use your Social Security number as the asset account identifier, excluding dashes. 3. Write a clear instruction for the fiduciary to act in accordance with their duties, ensuring funds are used exclusively to settle debts or obligations. Handling monthly bills. Paying monthly bills through special deposits or negotiable instruments requires careful execution. While accepted for value, A4V methods have gained popularity, it is essential to pair these instruments with a foreign grantor trust. This ensures your payments are processed legally and effectively. Key steps for monthly bills. 1. Obtain a foreign grantor trust number, 98 IN. 2. Open a trust bank account linked to your IN. 3. Endorse payment vouchers with accepted for value, include your bond number, and reference Title 31 of the U.S. Code. Spiritual and philosophical insights. At the core of these processes lies a deeper understanding of sovereignty and self-empowerment. Your signature is your most valuable asset, it is a manifestation of your authority and creativity. When you sign a document, you imbue it with value, transforming it from a mere promise to a binding instrument. Additionally, understanding that all financial systems operate on trust highlights the spiritual nature of commerce. By reclaiming your role as the creator of value, you align with universal principles of abundance and autonomy. Challenges and caveats. Navigating these systems is not without its challenges. Resistance from bank staff, accusations of fraud, and legal obstacles may arise. To overcome these, focus on preparation, education, and persistence. Understand that most resistance stems from ignorance, not malice. Common pitfalls to avoid. 1. Improper filing. Ensure all UCC filings are accurate and recorded correctly. 2. Lack of understanding. Take the time to study applicable laws and regulations thoroughly. 3. Aggression. Approach all interactions with calm professionalism.